Hey, good afternoon, everybody. It's Mike, smartoptiontraining.com. It's Wednesday, the 12th of April, and this is our Wednesday update, our daily recap. And it's been kind of a very nasty, putrid type day of action in the market overall. We had a CPI number this morning, and that was cooler than expected, and that was good, right? It shows inflation continues to slow down. There's still inflation, but it's slowing down, and that's what the market's looking for. And you had this huge pop. A lot of us traded that, made nice money. Could see the size of the pop on it. Then we started coming in, and then that was it. High of the day was made in the opening 10 minutes of the day. Right, that's tough. You can see here the actual high of the day during the trading hours was on the very second 5-minute candle there. Since then, we've been weak. Out in here is when the Fed minutes came out. Let's talk about the Fed minutes. To me, the Fed minutes were nothing that we really weren't expecting. The one thing I would say that maybe some people are focusing on is the Fed is predicting a light recession, mild recession in late in 2023. So we waffled around for a bit before we sold off, and we just put a new low of the day in here at 407.50, which on the SPY happens to be right on the 8-day. So these 2 days we touched it as well. So here's your third of 4 days in a row now. We've come down and we touched the 8-day. We got about 25 minutes to go. See if we close here or not. If we close above here, we're nothing's no damage so far. If we close below here, well, then you start looking down towards the 21 day, which is coming up here, and the 21 days trading here at 403.37. The intraday action has been tough the last couple of days. It's not been easy, and this is not a market you can easily just sit in. You kind of have to have a little bit of faith in stock or convictions. If you don't, you need to stay out of it. The Qs today, a little bit weaker. And, the one thing I'll say about the Qs is they said right from the open they didn't want it. 5-minute candle, we dropped. They never came in after anything. And we saw a lot of the tech names getting hit like that. IWM, after a nice couple of days, was a week again today. The diamonds held in much stronger, coming in now, but much stronger action there. Quickly talk about the VIX. The VIX here is still trading in a range. And what do I mean by that is the VIX is just in a hurry to go nowhere, kind of like this market. We get under 18, I think we see FOMO coming to market. We get above 20, we have problems. And this VIX is just trading up to 20 again today, just missed, just touched it and came right back off of it. And we're seeing this a lot. So what's going on under the covers is we're having some problems. So what did we do today? Shop, we had a nice upgrade. We traded this. I made money on it once. The second time took a small loss. Not the easiest of action, not a good candle on this way. Tried to break out into this nice big gap, reversed and came back out of it. Was smothered in calls to weekly 50s. Tesla this morning, right from the open week, got to just about the 50-day, nasty reversal there. We saw the same action today in Google, right? Amazon, ugly, back under the 50-day. Google also today, nasty candle under the 8-day. Nvidia, after yesterday's, last couple nice candles here, have given it all back and almost on the 21-day. AMD also weak, and the semis in general weak. That said, Meta showing some resilience today. Still above the 8-day, almost flat here on the day. Actually up just slightly here at this point, and actually try to take out the range high here of 216.94. Microsoft was also showing some strength early, coming in now. Also Apple. So you had a couple of your big tech names held in. The banks remain overall weak here. JP Morgan showed a lot of relative strength this morning before capitulating here. Same thing, we saw some strength in some of the big pharma names like BMY and Merck also holding in. So where do we go from here? We got PPI tomorrow morning. That's an inflationary number. We're expecting a print of plus, I think plus 0.1. I'll double correct that in the morning. Last month we were negative 0.1%, which was even better. We have retail sales and consumer sentiment on Friday, 2 more inflationary numbers to look at. And more importantly, earnings season kicks in on Friday morning with a bunch of the big banks kicking in. So at this point, the market's choppy. It's kind of holding in okay. There are some names that look good. The Dow and the Dow components, Chris pointed this out in the room, looks great still, holding in well. You have strength in names like Lulu still, which are holding in well. And, the market just still seems to be trying to find its footing. It still has a bullish lean to it. But, I continue to say I like the internals of the market, I like the way it looks. But at this point, the market's just not ready to break out. So you have to trade the action what's in front of you, trade the names that are in play, and just, until we break out of this monotonous range now we've been in for the last 2 weeks. So what that is, we'll see what we get tomorrow morning at 8:30 with PPI, and then we'll see how tomorrow shakes out. Everybody have a great evening. If you want to join us, link in the description below.